Today, we will discuss the tax implications of discharging business debt. My name is Chad Cummings, and I am an attorney and a certified public accountant serving clients in matters of business, tax, and commercial law throughout the states of Florida and Texas. I am Chief Executive Officer of the firm Cummings and Cummings Law. I also teach business law at Florida Gulf Coast University and hold 4 degrees, including 2 law degrees, as well as a variety of tax, financial, and accounting credentials, which I apply for the benefit of my clients in my law practice. Our firm website is www.cummings.law. Discharging business debt can be a complex process with significant tax implications. When a business is unable to meet its debt obligations, creditors may agree to forgive or even cancel a portion of the debt in certain cases. While this may initially seem like a relief, it is crucial to understand that the Internal Revenue Service generally considers forgiven debt as taxable income. This can result in unexpected tax liabilities for the business and its principals. It is important for business owners to understand that not all discharge debts are treated equally for tax purposes. The tax treatment can and does vary depending upon the type of debt, the financial condition of the business, and the specific circumstances surrounding the debt discharge. Engaging an experienced attorney and CPA is essential to navigate these complexities and ensure compliance with tax regulations. There are several types of debt discharge that a business might encounter, each with distinct tax consequences. Common types include cancellation of debt through bankruptcy, insolvency, or through a negotiated workout settlement with creditors. Each scenario has unique tax implications that must be carefully evaluated. For instance, debt discharged in a bankruptcy proceeding may not be considered taxable income under the Internal Revenue Code and in certain cases. However, this exemption is not automatic and requires a thorough understanding of both bankruptcy and tax law. Similarly, if a business is insolvent at the time of debt discharge, it may exclude the forgiven amount from taxable income, but this requires precise calculation and documentation. The tax implications of discharging business debt can be profound. The IRS typically requires businesses to report forgiven debt as income on their tax returns, as I mentioned earlier. This can increase the business's taxable income, potentially leading to a higher tax bill. It is essentially to accurately and consistently report all debt discharges to avoid penalties and interest. Moreover, businesses must further consider the potential impact on their financial statements. The recognition of discharged debt as income can affect profitability metrics and financial ratios, which may further influence stakeholder perceptions and decisions. An attorney and CPA can provide invaluable guidance in managing these implications and maintaining financial stability, as well as transparency in financial reporting matters. One common misconception is that all forgiven debt is automatically exempt from taxation. Hopefully, by this point, you understand that is not the case. Many business owners mistakenly believe that if a creditor forgives a debt, it is simply erased without any further tax or financial consequences. However, the view of the IRS with respect to forgiven debt is that it is taxable income, and this often comes as an unwelcome surprise. Another misconception is that informal agreements with creditors to forgive debt need not be reported or documented. This is also incorrect, as the IRS requires full disclosure of all forgiven debts, regardless of how the forgiveness was obtained. Failure to report such income can lead to significant penalties and legal issues, further underscoring the importance of professional advice. There are strategies available to mitigate the tax liability associated with discharged business debt. One approach is to strategically time the recognition of forgiven debt to coincide with periods of lower income, thereby potentially minimizing the tax impact. Another strategy involves leveraging available exclusions, such as the insolvency exclusion I mentioned a few moments ago, to further reduce taxable income. Businesses may also explore restructuring options that could lead to more favorable tax outcomes. This might involve renegotiating terms with creditors or exploring alternative financing arrangements. Consulting with an attorney and CPA can help identify the most effective strategies tailored to the specific needs and circumstances of the business and its owners. The nuances surrounding the discharge of business debt and its tax consequences highlight the necessity of professional guidance. An attorney and CPA can provide valuable assistance in understanding the nuances of tax law, identifying applicable exclusions, and ensuring accurate and timely reporting with the IRS. Professional guidance is also crucial in developing a comprehensive strategy to manage the financial and tax impacts of bad debt discharge. This includes evaluating the business's overall financial health, assessing potential risks, and implementing measures to safeguard against future liabilities. Engaging an experienced professional can provide peace of mind and protect the business's financial well-being, not to mention that of its owners. Discharging business debt is, as I'm sure you understand by now, a complex process fraught with potential tax and practical ramifications. Understanding the various types of debt discharge and their tax implications is absolutely essential for business owners facing these situations. Misconceptions about forgiven debt can lead to unexpected and unfavorable tax liabilities and unanticipated legal issues, making professional guidance indispensable. By working closely with an attorney and CPA, businesses can navigate the intricacies of debt discharge, mitigate tax liabilities, and ensure compliance with IRS regulations. This proactive approach not only protects the business's financial interests, but also best positions it for future success. Again, my name is Chad Cummings of Cummings and Cummings Law, and it was a pleasure sharing this information with you today. If you have any questions regarding this or any of the topics covered in my other videos, please visit my firm website at www.cummings.law, not .com, but .law, to schedule a telephone consultation. Thank you for your time, and I look forward to the opportunity to speak with and perhaps even work with you very soon.